My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate, teach, and put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Is the market about to break again from too much euphoria? Yesterday, DoorDash came public at a sky-high valuation, and then the stock nearly doubled. Today, wow, how about this? Airbnb came public at 68, then opened at 146, more than double! So we have to ask ourselves, is something going off the rails, or...
All aboard!
Okay. Look, it was otherwise a very sedate day away from this. The Dow slipped 70 points. S&P declined 0.13%. I mean, it puts you to sleep. NASDAQ gaining 0.54%. Does that ever go down? But after a prolonged bull market like we've had, it's only natural to wonder if things have gotten out of hand in some parts of this market, and that the overexuberance could be contagious to the other part. Should the money-losing Airbnb really be worth $100 billion? Does a delivery service like DoorDash deserve a $59 billion valuation when it burns cash every day? Let's posit some things right now before this incredible euphoria does get out of control. It has not yet, okay? And then turns into a monster that devours us all. First, I want to do something that I know from the YouTube that's going to be running 6 months from now I know I'm going to regret. I'm going to play devil's advocate and imagine a world where the action in Airbnb and DoorDash is fine, is rational, normal even, and their valuations are perfectly realistic. How the heck does Airbnb stock realistically double right out of the gate? I mean, you could argue that they underpriced the deal dramatically because they're great guys who wanted to reward people who got a piece of the offering. Too hard to swallow? What if Airbnb and DoorDash, for that matter, simply didn't really know what they were worth? And maybe they're like the next snowflake, manna from heaven. That's a data warehousing play. They came public at 120, opened at 245, and now trades at 373. I mean, what do you do? How do you argue with a guy who bought that at 245 and you say it's too much money, and he says, wait a second, is it 373? Why? Why do you own it? Because it goes higher. Well, why are you holding it? Because it's going even higher. I think Snowflake's in a league of its own. Their software saves companies massive amounts of money, but Airbnb actually might come close. I mean, they own the rent-to-home vacation space. Their business is fantastic right now because with COVID everywhere, it's safer to rent a house than stay at a hotel. What floor are you on? All right. Anyway, maybe we should just say congratulations to CEO Brian Chesky and leave it at that. Congratulations, Brian Chesky. But DoorDash, okay, they're simply one of many delivery services. I mean, they may be the largest. They may be the best. But they still compete with Uber Eats and Grubhub, which recently sold itself to a European company for $7.3 billion. That's a pretty huge discount to DoorDash's $59 billion valuation. Hey, maybe Grubhub got ripped off. I mean, anything's possible. We can take this one a step further. If you love using Airbnb and DoorDash all the time because of the pandemic, then why not own their stocks? Ooh, it's such good circular reasoning. Who wouldn't want a piece of an iconic company that you interact with in your day-to-day life? It just feels good. So what if their stocks are currently worth more than all their competitors put together? I mean, didn't your parents tell you that comparisons are odious? Mine did. I actually think that this precept is what drove a lot of the buying. Hey, I like the company. Airbnb's fabulous. I mean, geez, who doesn't? I'm not going out to a restaurant. This DoorDash is great. Let's keep playing Lucifer's buddy here. Assuming the DoorDash buyers are right and everyone else is wrong. You could say this all makes sense because Tesla's worth $594 billion, with a stock that's up 649% for the year, and everybody likes that one, so not why buy it? I mean, why not buy it? Everybody likes it. Right? I mean, you see that flatulence button? Let's buy some Tesla. Now, in the bond market, we call Tesla the bellwether. The bellwether. That's a piece of paper that all of the other bonds are priced from. They're priced off it. By the way, you know what? It's actually an agricultural term, bellwether. Yes, the bellwether is a castrated ram with a bell on its neck that leads the flock of sheep right around. Right now, Tesla's the bellwether that shareholders of Airbnb and DoorDash follow. Who am I to say that a castrated ram can be wrong? Okay, enough of the castrated ram. At least when it comes to the IPOs. I bet it is wrong when the deals themselves are being priced and where they open. That's what's wrong right now. This part is broken. I'm telling you. How do I know that? Arrogance? Of course. 21 years ago, I brought a company public. It's called TheStreet.com. It was a money-losing enterprise. No, it was an uber money-losing enterprise that was beloved as a category winner during the tremendous dot-com bull market. Who else besides another rival, MarketWatch, had such a great online publication? Remember, online only. I mean, all the rest of the guys we were up against, well, they were printed on dead trees that were cut down in Canada, shipped to New York, bundled up, then unbundled, and eventually thrown on your lawn, cold off the presses. Back then, we weren't going for profit. Oh, no. We were going for first mover advantage. Still, I knew we had a big following. What I didn't know was that there was a legion of fans who wanted it in so badly to the deal of the street coming public at 19, that they came in with a huge amount of market orders and the stock opened at $62. I was screaming at the syndicate desk to open the stock lower. Please, do not let this happen. Do not let this happen. Everybody who buys it's going to lose money. Please don't open it this high. I begged them. They could care less. In fact, what they said was there was nothing they could do. The public was coming in with market orders, no limits, and the people who got a piece of the deal didn't want to sell it. So they're going to get $62 when they buy. Now, they could have priced the deal so low given the level of demand, but they wouldn't do that. They said that they couldn't control things, that they couldn't price it low, and that the buyers were, what they ended up saying was the buyers weren't the usual institutional customers who wanted it at a certain price and would stay away from it at another. They were so crazy for the darn stock that they bought it with market orders and they just didn't care what they paid. So what happened? Well, the stock jumped up immediately to $66 after opening 62. Jumped up. It was at $66 at around 10:30. And then it never saw those levels again. It was the highest it ever traded. Instead, it began the long, sickening slide down to $1 and change a few years later, with a nary a stop in between. Hey, at least we stayed in business. More than 300 companies that came public during that same period ended up going under. Again, you can say Airbnb and DoorDash are nothing like the street. They aren't. These are major, dominant players that have real staying power, and I do not think their stocks are about to roll over anytime soon. There's way too much momentum, joy even. But do they deserve it? Or are the mechanics of the market broken once again, like they were for when the street came public, when it was supposed to open around 19, then 20 and 23, and it ended at 62. Before the pandemic, I was worried about the delivery industry because there was so much competition. But now DoorDash has got a huge number of customers. Airbnb is unique, but it's also spawning its own imitators. I mean, it's got Expedia gunning for them, although I think, again, that Airbnb is the winner and all-time champ. More importantly, I'm not actually trying to compare Airbnb and DoorDash to the Street.com in 1999. That's not it. What I'm trying to do is compare the way stocks work, okay? DoorDash and Airbnb are much, much better. I'm just doing it to illustrate what happens when the stock market breaks down, like it broke down during the dot-com era, and the IPO process fails. Goldman Sachs, the firm that brought the street public, simply couldn't control the stock price at the IPO. Now, nobody wanted it to open at 62, not the buyers. I couldn't sell. It was locked up. What I fear is that the same thing is happening again. I know the three founders of Airbnb are now worth $10 billion on paper. Hey, I was worth $360 million, at least for one afternoon. I sure wish I could have sold some of those stocks at 66, but the stock, no, you couldn't. I wonder if Chesky and company wish they were unlocked. Maybe they can get an early unlocking and the stock can come down a little. Of course, it's not the only craziness in this market. Every day now we see some stock explode higher, a SPAC, an electric vehicle play, maybe a biotech like Greenwich Life Sciences, which only rocketed up nearly 1,000% yesterday and was basically old news about a breast cancer drug. Good old GLSI, $5 one day, 57 the next, and then 72 today. Epic run, 48 hours. So what do you do? Just because the IPO market price and system is broken, do you sell them? Do you buy them? Do you short them? Well, you definitely shouldn't short them. And betting against these high flyers is too dangerous. We're about to have a $900 billion stimulus package. The European Central Bank just today said they need to take a more dovish approach. China is booming. And through it all, interest rates remain incredibly low. Money is cheap. Plus, we're about to be flooded with vaccines, including the approval tonight of the Pfizer vaccine by an FDA panel, which will now recommend yes to the FDA itself. Oh, I don't want to short anything in that environment. Honestly, what if it's not that these stocks are ridiculously overvalued? What if the rest of the market is ridiculously undervalued? I mean, maybe the market's dirt cheap. Just positing. The bottom line. Okay, it's a stretch to say the market's dirt cheap. We know it isn't by any means. But the backdrop is too positive to bet aggressively against anything here. If you own something that's up huge, I think maybe you ring the register on part of the position. Shorting, though, that's even crazier than buying Airbnb and DoorDash at these levels, which, by the way, probably won't work at this point. No, but at the moment, shorting these stocks, I'm calling that financial suicide. Tej in Tennessee. Tej.
Hey, Jim. Booyah from Chattanooga, Tennessee.
No, I love that town. What's going on?
I'm actually one of those young Robinhood investors that you've mentioned on the show recently. Just wanted to say thank you for sticking with the little guy.
Oh, thank you, man. I was all over today trying to figure out. I don't want to hurt the little guy. I don't want to get him in or out. I want him to own stocks like DoorDash and get that big gain. I don't want to lose that opportunity for them. That's not my job. Go ahead. How can I help?
My question is on Lemonade, ticker LMND. The stock shot up nearly 30% over the last 5 to 6 days thanks to bullish Wall Street estimates. I think the company has a lot of disruptive long-term potential within the insurance market, but I'm wondering if you think it's too expensive to buy now and if I should wait for a pullback before.
Tess, great question. And I have been a huge fan of Lemonade. I read an article online. There are so many things. It's like Goldman Sachs has been displaced by Reddit. I mean, I swear. But there's so much hype in it right now. I mean, look, I liked it at 50. Can I like it as much at 100? No, I just can't. I mean, I just can't. I can't like it as much. I feel like calling my mom. Mom, I can't like it as much. It's just doubled. Like it's a lemonade stand and not an incredible insurance company, or at least a broker of it, so to speak. That all the young people are like, I said, what are you doing? Oh, I'm buying some insurance. Okay, look, there's a lot of craziness in this market, but the fact remains the backdrop is just way too positive to aggressively bet against anything here. It's the IPO process that's broken on Mad Money Tonight. Has stitched it together in a way to win in retail with or without COVID crisis? Definitely with the COVID crisis. Hey, let's talk to the CEO. Then, we've seen some spectacular moves, could resist, in the electric vehicle stocks. But is the market getting ahead of itself? I'm going to go through the plays making the biggest moves, or you're going to love that piece. And some patients are still delaying essential care out of fear of coronavirus. Who can blame them? But what's impacting, let's say, how does it impact the business of Edwards Life Science? Just a sec, let me buy some insurance. Oh, I just got some Toll Life. Oh man, that collision's too expensive. I'm just going to get the regular. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.